We have all heard about equities and commodities. But how are they traded in the stock market? Is there any difference between equity and commodity? How to invest in equities and commodities? All these questions will be answered in this video today. So let's get started. Hello everybody, I am Vaishnavi and welcome to aliceblue Online. Firstly, let us know what is the meaning of equity in share market. An equity is a part of the ownership of the company that is issued to the general public to raise capital. So when you buy equities of a company, you become the owner of that company proportional to the value of shares. The purchase of equities entitles you to special benefits like profit sharing, dividends, voting rights, and the risks associated with them. But when you do intraday trading in equities, you will not be entitled to such special benefits. Now let's understand what is the meaning of commodity in the share market. In simple terms, a commodity is a product that is used in your daily life like cotton, black pepper, etc. Or a commodity also could be something valuable like gold and silver. So you can invest in commodities like gold, silver, cotton, black pepper, etc. just like how you would invest in stocks of various companies. Now let us try and understand the difference between equities and commodities. When you invest in equities, you become the owner of the company proportional to the value of shares and expect your money to grow with the company's growth. On the other hand, when you invest in commodities, you become the owner of the commodities and expect your money to grow with the value of the commodity. The instruments in equities are physical shares, futures and options, whereas in commodities it is physical commodities, futures and options. The mode of exchange is NSE and BSE in equities, and in commodities it is MCX. You can buy equities and keep them with you for a month, a year or a decade and later and sell them. But commodity contracts expire every month. That means the value of futures or options contracts will go down to zero every month. Equity markets are comparatively less volatile, whereas commodities are highly volatile. Equities are comparatively less riskier than commodities. Dividends, bonus shares, voting rights, equity investors enjoy all these extra benefits. But commodity investors do not receive these benefits. Equities do not have an expiry date, but equity futures and options do expire every month. Commodity futures and options, on the other hand, expire every month. There are lower margins in equity but higher margins in commodity. The trading hours for equities are 9:15 a.m. to 3:30 p.m. from Monday to Friday. In commodities for precious metal, base metal and energy commodities, it is 9 a.m. to 11:30 p.m. from Monday to Friday. For agri-commodities, it is 10 a.m. to 5 p.m. from Monday to Friday. The factors affecting the movement for equities are company results, news, economic reforms, etc. For commodities, it is usually based on the demand and supply of the commodities. Equities are suitable for both long-term and short-term, whereas commodities are suitable for short-term. Now, you must be wondering how to invest in equities and commodities. You can invest in equities via cash, that is normal investment, or via futures and options contracts. And you can invest in commodities only via futures and options contracts. So, what are futures and options contracts? Futures and options contracts mirror the prices of the commodities depending on the supply and demand. For instance, let's say you want to buy gold. If the demand for gold increases, the price of gold futures and options will increase proportionally, and if the demand decreases, the price of gold futures and options will also decrease. Well, there is a difference between stock market and commodity market. Stock market is an electronic platform where companies issue shares to the public. Apart from that, various instruments like futures and options, ETFs, mutual funds, debentures, etc. are traded in the stock market. On the other hand, in commodity markets, only futures and options of commodities are traded. Well, that was everything regarding equities and commodities. Thank you for watching. For more such informative videos, make sure that you subscribe to aliceblue Online. This is Vaishnavi signing off. I will see you in the next video.
Investment in securities markets are subject to market risks. Read all the related documents carefully before investing.